Hi there and welcome to this week's edition of Maqro Minutes. It's Wednesday, the 17th of March. I'm Mark Gardner, Head of Trading here at Maqro Capital. We'll start with the disclosure and disclaimer here. This presentation is general advice only. It doesn't take into account your specific circumstances and should not be acted on without full understanding of your current situation and future goals and objectives by a fully qualified financial advisor. In doing so, you risk making a commitment to a product or strategy that may not be suitable to your needs. Okay, let's get into it now. So over the last week, the stocks in our universe, we've got FMG, NEC and TYR. So, we're going to start off with Fortescue. So the share price of Fortescue has been underperforming its peers generally over the last week. It's been fairly negative price action, which started really on the back of iron ore prices dropping, and also which is pretty much in line with China's latest pollution crackdown. Other factors include a higher cost base as well as a lower iron ore quality compared to other producers. However, we see this as basically temporary. The iron ore price has recovered into today, and we've seen BHP and Rio actually sort of fall away pretty much around to the same levels and percentage falls as what Fortescue has. So it's currently trading unchanged today here at about 20.50. There is greater long-term risk to Chinese demand for iron ore given the government plans to cut steel capacity and move towards scrap intensive electric arc furnace production. Even though February shipments have been lower than January due to seasonal weather factors in Australia and Brazil, even though this is constrained demand, China's forward orders are up about 2.8% over those 2 months. So next one we have is Nine Entertainment Group. Nine traded around about a few percent higher at 303 as the market responded to news, and then basically returned back under $3. No overall change in the share price over the week. Essentially the news that was there was Nine signing a 7-year affiliation agreement with their old pal, network Win. Now Win operates television and broadcasting services in 29 markets across 6 states. The agreement commences on the 1st of July and it terminates their agreement with Southern Cross. Nine earns a good affiliation fee of about 50% out of all advertising revenues earned by Win. That's expected to boost Nine's bottom line from financial year 2022. Furthermore, Nine will benefit from the free promotion of Nine's offerings on the Win network. That'll extend their reach and market penetration, particularly in the online stuff. Win will also provide sales representation service for Nine in New South Wales and Darwin. Next up, we've got TYR, Tyro, which has been a fairly long and frustrating ride over the last sort of 6 months. It's steadily recovered now. It's up yet again today, actually, about 3% plus. It's around about $3.51 now. There's been a fairly consistent rally out of its $2.64 post-announcement price of their connectivity issues, which was on the 5th of January. They are yet to achieve profitability, but Tyro's performance as measured by revenue growth and transaction value growth is around 9.5% for the first half of the financial year 2021 compared to the last period, and March year to date increase of 10%. This growth primarily comes from retail sales performing the strongest amidst pandemic uncertainty. I think what will also help that stock is that UBS made another recommendation recently saying that the Australian economic growth forecasts have been raised and it will be largely consumer driven as people dip into their savings and credit cards, etc., to spend over the next year. I think that plays into the hands of Tyro quite well. Despite their lower payments revenues due to the change in credit card mix, they've got fewer card payments and higher debit card payments. So the gross profit for Tyro increased about 16% and gross margin increased by about 9.2 basis points. So reflecting the higher profitability of the debit cards over the international cards. Recent terminal connectivity issue damage was kept to a minimum in the short term with an industry-first innovative solution to safeguard against future outages, which one would hope that would be their response to what was a pretty ordinary firmware update that took down their system. So now we're going to go into stocks to watch out for over the next week. The first one's Airtasker IPO. So expected to list Monday on the 22nd. They're looking to raise capital of around 83.7 million. Existing shares of 105.6 million, selling at 65 cents a piece. Look, this company is the flag bearer of the gig economy. The platform has rapidly scaled in Australia. Opportunities expand into global markets in the US, where I think that it would work even better than Australia. Looking into the IPO, it was exclusively done by Morgans, and retail clients were seeing only an allocation of 26% of what they applied for. So it looks to be 4 or 5 times oversubscribed. Look, they reported a pro forma net profit of 5.2 million for financial year 20, and estimates of a $6.2 million in losses for this financial year due to the pandemic and social distancing, etc., preventing people from using the service. A really positive point to look at is that their average dollar value per task is increasing quite rapidly. Initially, it was around sort of $97 in the per task in the earlier days, and they're forecasted to be up around $190+ per task by the end of the current year. Basically, its tasks become a little bit more complex and sophisticated. There's 910,000 paying customers and 140,000 taskers as of October last year. I would expect that number to be significantly higher again, given we're having the vaccine rollout proved to be relatively successful and a little bit more of confidence in the economy reopening. Seven West Media is selling off their entire $46 million holdings, I think, but they were an early investor, so that's one to watch out for on Monday morning. I would expect it to go reasonably well, but as always, it'll be a wait and see. So next one is one of two stocks that are involved in the March quarter's index rebalance. So we have got no change to the top 100 stocks in the ASX index, but in the ASX 200 we have about 6 stocks out, 6 stocks in. The likes of Sandfire, Resources, Service Stream and Tassal are all coming out. Those prices have been heavy in those stocks for the last few days, as obviously we would have index funds unwinding those as they're no longer going to be part of the ASX 200. But stocks coming in, there are two particularly we're focusing on. First one here is CDA. Now, CDA is a technology, hardware and equipment space. Last 12 months has seen it have a very steep profit trajectory. It reported a $64 million profit for financial year 2020. It's done some very smart merger and acquisition movements as well. It acquired, or it will acquire, I think by the end of April, Domo Tactical Communications from a private equity firm, which they've paid about 134 million Aussie dollars for. They've done this fully funded out of cash reserves. And as I said before, they're expected to complete that the 30th of April. So this acquisition is very good for the business in terms of it's in line with their strategic growth plan in the tactical communications business space, and it fills a technology gap that they had in their product offering. It really does leverage Codan's global distribution channels as well. This is expected to contribute approximately 90 million in sales and about 9 million in profit before tax. There's a limited amount of analysts covering it at the moment. However, I would expect that to increase as it becomes part of the index, but all unanimously optimistic, seeing an improvement in revenue and earnings per share estimates. So And this, we've now come to our second one, which is being included with the March rebalance, is Nuix. So Nuix has been quickly becoming a bit of a market darling. It did have a bit of a drop after reporting late February this year, about 25%, but these were due to some more FX losses and monetisation charges. So basically what Nuix does, it operates in the growing sector of data and regulatory compliance. So particularly in the US and Australia, really this space is expanding at a fairly rapid pace due to high profile cases like the Panama Papers, recent royal commissions in Australia, which Nuix's software already supports. So they, even in light of the recent drop, they have done some good things. They've shored up a lot of their longer term contracts. They've lowered their customer churn, and they've basically reduced their total operating costs, which has brought in some consistent gross margins. Look, management remains very confident of achieving their financial year 2021 forecasts, and both stocks, Codan and Nuix, will benefit from the index funds having a need to be purchasing this to add to their portfolios. So now looking ahead, we're just going to cover here Australian unemployment or employment and FOMC. We got employment numbers here in Australia tomorrow at 11:30. They have been quite strong. We're expecting the rate to drop further again, the participation rate to increase once again. We'll obviously send out something on the back of those once they're released at 11:30. Prior to that, though, we have Federal Open Market Committee, the Fed in the States, their central bank, releasing their statement or the results of their meeting. Usually there's just a summary of economic projections and forecasts for unemployment, inflation and GDP. Look, the main topic of discussion will probably be centred around the dramatic reversal, the 3 vaccines, the second stimulus package of 1.9 trillion, and convincing consumers and markets that the recovery isn't over yet, and that monetary policy and inflation will probably not change anywhere in the near future. Rates are not expected to change until around about 2024 now. Powell's been pretty clear in giving the impression that inflation's a transitory thing. There'll be pockets of inflation, but the long-term inflation expectations are broadly stable. Most of these central banks these days will more so focus on wage inflation as opposed to headline CPI and PPI numbers. And look, we're not really going to get any proper readings out of that until we get the labour market recovering a little bit further. So they'll give some updates on the bond buying plans, and they will more than likely just re-emphasise that we're a long way away from pre-pandemic levels. But we shall see what happens there, given the reaction in bond yields has been quite a significant driving force for the equity markets of late, and is fairly important in terms of picking which sectors we should be focusing on. As the inflation story grows, there will be a definite push out of growth into value. So we also do have ECB President Lagarde speaking at 7 p.m. This is just economic and monetary affairs of the European Parliament. It's a fairly standard speech. Again, don't really expect either the FOMC or the ECB President to deviate from the current rhetoric coming out of central banks globally. It would be very surprising if they were to say anything that was going to destabilise the recovery out of the pandemic. So that pretty much wraps us up. Thank you for listening to the Macro Minutes, and we shall speak next week. Happy trading.